Hey, welcome to today's webinar on traditional banks are thriving, but most people's financial situation is really getting much worse. How to finally take control of your money and achieve your financial goals. Hi, I'm Glen. Thanks for taking the time to come to this webinar. I really appreciate your time here. Today, we're going to be talking about how to eliminate your debt, even create a retirement paycheck that'll last as long as you do. And imagine this, send your kids to college. You may be wondering who this presentation is for. Well, it's for people who are planning to save for retirement, thinking about that legacy planning, wealth management, even for business owners, really anyone that's tired of traditional banks. If you are career-minded or entrepreneurial-minded, or maybe in the corporate world, there will be a ton of value for you in this presentation. Before we get started, you may be wondering, who is Glen Zacher? So here's a little bit about me. When I first started my financial services career, I started with CIBC as an investment banker, and I learned that banks are very profitable. They're servicing a huge amount of people in debt, and they're not really necessarily helping people get out of debt as I thought. Banks lend when essentially you don't need money, and really they just provide band-aid solutions. So with all that experience at CIBC, here's what I really learned about the big bank problem. For every dollar of disposable income you earn, you actually owe $1.50. People aren't earning enough net income to meet their financial obligations. It's an extension of their paycheck. You're really using credit to finance your lifestyle. Over the years, I've learned that there's a big financial mindset problem. People are wanting to live a champagne lifestyle on a beer budget. People haven't learned any other way because most people stick to what they know. People have been conditioned to think about banks, money, and insurance from a singular perspective. Everyone is wearing different colored sunglasses. What does this mean? Everyone is wearing different colored sunglasses. Well, when it comes to things like financial awareness, everyone sees what they want to see or what they've been programmed to see. Let's say you grew up in an environment where you began to see everything with red sunglasses. And I was born and grew up in an environment where I see everything with green sunglasses. Two completely different perspectives because of two completely different environments. One day you and I are speaking with each other and you notice a gentleman walk by and you say to me, "That's a nice red t-shirt." And I say, "What are you talking about? The t-shirt is green." You respond, "No, it isn't. It's red." And we end up arguing over whether it's red or green t-shirt. Then someone comes along and says, "Hey, what are you arguing about? The t-shirt is white. You're both wearing sunglasses. Take them off." That is essentially what this webinar is about, taking off the sunglasses that you've been wearing and focusing on a new perspective that actually gets better results than you've been experiencing. If you could change the process and do what the banks were doing, by recapturing all of that interest that you pay to lenders, just imagine what your financial future would look like. As I was continuing my work with CIBC, I began to think about changing my financial future. It was at this point I left the bank and I took a position with Monarch Insurance. There, I started to learn more about building wealth while working with other financial planners. I started to get really excited, but I stayed for only 6 months because I really just wanted to be an entrepreneur. So in early January 2004, I made the conscious and somewhat radical decision to open up my own firm, McGuire Financial. As soon as I started McGuire, I began to offer people a more comprehensive step-by-step financial planning program. It was a more holistic platform of independent products that were exempt from the traditional market products, a combination of good investments, whole life insurance, debt restructuring, basically a whole process that leads to creating a good retirement paycheck. As I was working more successfully with clients, in about early 2009, I met a gentleman named Bob Shields from St. Catharines, Ontario. I really liked what he had to say, so we invited him to come to Edmonton for a 2-day training to teach our advisors more about his book. You don't have to die to win. These strategies became the basis of our financial concepts and has come to be known as becoming your own banker. It was about this same time that I got an email from a friend who invited me to a 2-day seminar in Las Vegas. It was a seminar on how to eliminate debt forever. That seminar introduced me to the concept of taking control of your money, lending it to yourself, and recapturing the interest that you would otherwise pay to a traditional bank. When I got back to Canada, I asked myself, is it possible to do what they talked about here in Canada? As it turns out, it's not only possible to do this in Canada, but it makes a whole lot of financial sense. This became the basis for our 2-hour seminars, which then led to an all-day boot camp, which we started in 2010. And since then, we have had thousands of people attend our boot camps. Then in 2011, I discovered the book, Becoming Your Own Banker by Nelson Nash. And then in 2012, I attended his annual think tank. So what is it that we all learn from this process? We learned that there is a financial solution called participating dividend paying whole life, which allows our clients to grow their net worth safely and securely. And you'll be able to lend money to yourself using the policy as security without interrupting the growth of the cash value. This is not new. This vehicle has been in Canada for 171 years and has never failed to pay a dividend. Not only that, people like Walt Disney, Warren Buffett, and Jim Pattison use these same strategies to start their own businesses when no other bank would lend them money. We have hosted 4 super conferences in the last 6 years with guest speakers like Nelson Nash and Robert Murphy, and we've helped thousands of Canadians understand how to take control of their finances. Today, we are a team of 14 people and operate all across Canada. Our head office is in Edmonton. We do 14 Talk to the Expert radio shows per year on the Course Network in Edmonton and Calgary, 23 boot camps per year between the two cities. We've trained a number of agents in Canada, and Mike Riley, who plays for the Edmonton Eskimos, is our current spokesman. He believes strongly in the concept of financial coaching, and we do seminars for doctors and business owners, including taxation strategies and comprehensive financial planning. And as I mentioned, you're going to hear a lot about this little known concept of becoming the banker in your life. So let's get right into it. The first subject that I really love to dive into is the concept of eliminating debt. While you may have heard this concept before, you'll likely struggle with debt and continue to struggle with debt. So the reason why you need to learn this new process is because the conventional way of paying off debt will likely take you decades, and you'll end up paying tens of thousands of dollars of interest to banks and credit card companies. So this is Brent's story. Brent is a 47-year-old chiropractor. He had $420,000 in consumer debt. He started his banking system with making premium deposits of $20,000 a year. So based on this, what did Brent accomplish? First of all, did he have to work any harder? Did he have to change his cash flow? Did he ever lose control of his money? No, he did not. In fact, he paid off all of his debt in 57 months versus 252 months with traditional banks. The total dollars put into the policy was $108,000. His total policy loans were $86,480 secured by his policy. So he recaptured $420,000 of consumer debt and 2 mortgages. The life insurance company valued their money and charged an interest rate of 7.5%. Like lending money from a traditional bank, life insurance companies assess an interest rate on their capital as well. So in total, Brent had $86,480 plus the interest on the policy loans of $17,141 for a total of $103,621. Brent now has $7,640 per month beginning in month 57 to use for policy loan repayments. $103,621 divided by $7,640, Brent paid all of his policy loans back in 13 and a half months. By month 70, his policy loans are fully repaid. So basically, Brent managed to pay off $420,000 in debt much quicker than he would have with traditional banks. If you think about it, how long would it take someone to pay that off with the traditional bank? It would take them 21 years at $20,000 a year, and Brent did it in only 5.8 years. So what else does Brent have? Well, he has $7,640 a month in cash flow. He has no stress, no pressure. His death benefit and cash values have increased inside of his banking policy to do whatever he chooses. To me, that is a total win. One of the main reasons why people work with us for this type of strategy is because they're looking for a big win in their retirement years. Essentially, what they're looking for is to create a pretty big retirement paycheck. Let's talk about that for a bit. There are three main investment components to the IRP, known as the Insured Retirement Plan. And the first is we're starting with a participating whole life policy, or PAR for short. Back in 2008, when the equity markets crashed by more than 30%, guess how much the PAR policy paid out? You can go back and Google some of the news articles from 2008, and you'll see that their dividend rate was 8% on a PAR policy. Today, some of the PAR policies available are paying over 6.5% on their dividend rate, and they've been paying a dividend on these policies since 1848. The second component is the accumulation account. The deposits inside the accumulation account grow tax-free as long as they remain inside the policy. And finally, when you reach retirement, we can turn on the third component, which is to develop your retirement paycheck. Most life insurance policies benefit your beneficiaries when you pass away. This type of life insurance policy is designed to benefit you while you are alive and your beneficiaries upon your passing. So let's take a look at a case study. We have Mr. Riley, who is age 45, and he has $50,000 left over in his corporation each year, and he'd like to retire at the age of 71. Some of his objectives are, he'd like to have permanent insurance on his life in case something happens to him. He would like to have additional income to support his retirement plans. He is looking at reducing the overall risk of his current investment portfolio, and he would like to leave an estate for his children and pay less taxes to Revenue Canada. So Mr. Riley funds a $1.6 million whole life policy and agrees to make annual deposits of $50,000 for the next 20 years. So what he is committing to is $50,000 per year, or $1 million to this strategy. Let's fast forward 20 years, and in the 20th year, the policy is now paid up and no more premiums are required. This is guaranteed to you in writing. Also, Mr. Riley is now age 65, and there is approximately $1.6 million in cash inside the policy, and the death benefit has almost doubled from $1.6 million to $2.9 million. So at the age 65, no more premiums are required, and the cash value inside the policy is $1.6 million. Now, let's assume Mr. Riley chooses age 71 to retire. He has the following options. Cash value has now grown from $1.6 million to over $2.3 million, which can be accessed as a lump sum. Second, he could collateralize the policy. Create an annual pension plan. Mr. Riley will receive $180,213 per year, tax-free for 15 years. Lastly, he could continue to let the policy grow and maximize his estate value. So let's assume Mr. Riley decides to choose option 2 and turn on the pension plan. Mr. Riley will receive $180,213 tax-free dollars for the next 15 years, or just over $2.7 million. This income does not need to be reported on Mr. Riley's personal income tax. Let's assume Mr. Riley passes on at the age of 86, and so one check goes out to the lending institution to pay off the loan, and the second check of almost $1.5 million goes to Mr. Riley's beneficiaries tax-free. So just remember, Mr. Riley committed $1 million to this strategy, and we turned it into $4.2 million. He received a tax-free pension while he was alive of $2.7 million, and his beneficiaries will get $1.5 million in a death benefit and the capital dividend account, which is a special account inside your corporation and gets a credit of $5.9 million. I know that this example is for a business owner, but it can also be used personally as well. So let's talk about how you can use the same system to send your kids to college. Whether that's a university, college, or even secondary tech school, you can use this system. So you might be thinking that you can use a traditional RASP formula, but there are many limitations to that. First, you're investing money, which means you have to put your money at risk. There is a maximum permitted amount that you can contribute each year, and an overall lifetime contribution limit. So, with the Canadian Education Savings Grant, the government contributes 20% of your annual contribution to a maximum of $500 per child and a lifetime maximum of $7,200. When your child is ready to use the money in the RESP, The income paid to the child is taxed in their hands. Each withdrawal reduces the balance of the account. The money has to be used up before the child reaches age 26. And what if your child decides to delay going to college? This could be a real problem. So, the secret, which is not known by many people, is the use of a participating dividend-paying whole life policy. No kidding. Who would have guessed that? Unlike an RESP, there is no overall lifetime contribution limit. Cash values accumulate and vest daily with the policy owner, which is you. There is no lifetime maximum amount. Cash values can be accessed by the policy owner, being you, at any time and for any purpose. You don't have to wait until your children go to school to use the money. And there are no restrictions. When a policy loan is taken, cash values are not reduced. 100% of the cash values in the policy continue to grow uninterrupted while your child is in school. And here is the really cool thing. Policy loans are not taxed when it comes time to pay for tuition. Cash values can never go down. The policy owner never loses control of the money, and cash values are accessible anytime and for any purpose. Dividends are not guaranteed until they are declared. Once they are declared, it's guaranteed to be credited to the policy. I might know what you're thinking. How is this possible? And how come no one at the bank told me about this? A properly designed dividend-paying whole life policy is far superior to the RESP because of the flexibility and the control you have. So, I think you can see by now that the dividend-paying whole life strategy is a great way to eliminate debt, create a retirement paycheck, or even send your kids to college. Now that you know about it, it's going to be really hard to resist looking further into it because of all the great features and benefits. So, now you have a choice. You can either A, forget all about it, or B, make a choice today to help make your financial dreams a reality. I've set aside some time in the next 48 hours to speak with you personally. On this session, we'll work together to craft a step-by-step game plan to meet your financial goals, eliminate your debt, create your retirement paycheck, and send your kids to college. I'm really looking to work with people who are open-minded and coachable, people who are action-oriented, people who are at or near a combined income of at least $100,000 per year, people who want to take charge of their financial future, business owners, professionals, and families. Why am I doing this? Well, I love to educate and empower people to take control of their financial future and to create a significant and positive impact on the financial success and everyday quality of life for individuals, families, and businesses. I also know that you might want our help to make these dreams of financial success a reality. So what you have to do now is go to the URL that you see on your screen, McGuireFinancial.ca/apply. There, you'll be able to choose a time that's convenient for you. I look forward to having a conversation and starting the process sooner rather than later. The choice is in your hands now. I hope to speak to you soon.